This is London with MarketHedge. Let's pay attention to Bitcoin. In terms of the downside move, I'll say Bitcoin is cutting against the grain of the rest of the market today. Tesla off a bit. We've got Nvidia, Apple, the NASDAQ, even gold is up. Let's pay attention to Bitcoin after peeling off of an overbought situation on that 4-hourly RSI. Congrats to any bears who picked up. In terms of that short, we're going to talk about this lower level. I've got this 103, which is the bottom range of my stacked 100 orders. You guys remember in this zone, I said, let me go ahead and stack some orders. Let me hedge, which means what? Let me pull some of the cash out of the position I could have entered here, and let me just stack it underneath. That way I'm not fully exposed at the top, and I give Bitcoin an opportunity to pick up, noted at leverage, some positions to fly up north if we can complete this pattern. We have a nice upside pattern to complete. I'm still very excited about reaching, guys, my number is $130,000, which is going to be the expression if we look at that ascending triangle. Just pay attention to this very quickly. It's an interesting pattern because we have actually used now this deep dig a couple of Fridays ago on Bitcoin. Yeah, now it's maybe going to work to our advantage. How would that be? Because we need the amplitude move in the ascending triangle to, ascending triangle in terms of that amplitude to stack along the top side, which is going to be right at and ring in right at, let me make sure, but I think right at that one. There we go, 130, 130, just and some change, $71. So that big dig that we all experienced on Bitcoin really could work to our favor. What's the key metric? We have to get up and over that 115.9, call it $116,000. Now, in terms of the trades, I want you to understand, please, the specific ideology or the framework strategy behind stacking orders. Yes, my margin is out of the picture, right? To the extent that there is a max drawdown configurable, yes, it's $241,000. That means if Bitcoin goes all the way down to $103,000, and why did I pick that level? Let's remind ourselves, if Bitcoin goes all the way down to 103, I'll be exposed $241,000 in terms of a drawdown, but I didn't mind picking up at that level. Let's discuss why. As you'll see, the current pickups along the 4-hourly standard deviation, right? What's the target from that 4-hourly standard deviation? It's going to be that mid-level, that 20 moving average on the Bollinger Band. If we look at the weekly, however, we can repeat that framework and say, well, if I could pick up at the lower standard deviation, which is currently at 103,741, which is just about in line with the bottom expression, that lower expression of my stacked orders. I'm covered through 103.7. You got it right. So from the 103.7, looking at that 103, it's actually right on par right now, almost to the dollar. So I'm very comfortable. This is still calculating, but they're both now at 103.7. Fantastic. And I'm comfortable picking up and having Bitcoin push to this level. A little bit beyond, I'd like to add some more cash and take a ride back up to, if possible, that 20 moving average. It's not a strategy without risk, but it is a very well-established strategy. As you guys look at your materials from New York Institute of Finance, where Wall Street traders go to school, period, guys, where they learn. They don't learn on, Magic Kingdom on YouTube. They're learning literally with the fundamentals of technical analysis as expressed by the New York Institute of Finance. So as we see that macro picture on the 4-hourly, in terms of the current pickups here with the upside target, you can see and really understand, okay, well, that's not a bad strategy here on the weekly as it is currently on the 4-hourly. So let's review a few metrics. Let's go through, for instance, on some things that are not as, maybe not quite as favorable as we're looking at MACD, for instance. Let's look at this MACD. It's been a little tricky the last couple of days. It's normally, and there we go. Now she wants to pop up. Let's say in terms of the 4-hourly, as we're hitting that lower standard deviation band, you can just see we're just peeling to the downside again here on that 4-hourly. It has been a very trusted metric. We have really become somewhat reliant, at least highly cognizant in terms of what its position is, over, meaning green on the histogram MACD, or under, being bearish, guys. So a little bit of let's say a few flips, quick flips here and there, but overall some great trades have come into the mix. This one hurt the bears a little bit, had a nice rebound here that lasted a while in this zone, but just again with And we can say this was a little bit tough for the bears if they just followed this pure signal to short here. That was quite a little flip up to the upside, which we wrote up on some longs. But to the extent that it's just been a good lasting metric and overall has paid in the last several weeks, we're going to continue to pay attention to it. What's the daily as we look at this, I'd say troublesome or bearish for right now, bearish MACD histogram? Let's look at the daily. Let's remind ourselves of one thing. We're still green, right? And we've got this specific, I'd say in terms of technically reminding ourselves of anything on this time frame, it's going to be what? The fact, first of all, this is a little bit coy, guys. Anytime you see a real sharp angle on a standard deviation, and it looks like, well, you almost came into contact with your preceding wicks here, right? With your price action. Remind yourselves, you need to measure up here, right? So from that 120 down to that 116, that was $4,000 off of hitting that topside target. From here, let's say if you're at 118 and you went down to your 116, you're still $2,000 away from really hitting your target. So this makes it appear as that it was a really close hit as this continues to barrel to the downside. There are quite a few, established traders who are not happy about the lack of a hit to the upside. Let's say that. But the follow-up, kind of the sequential here, is going to be what? The sequential is going to be we have a nice flat top resistance. Yes, we do. Nice flat top resistance. And to the extent that we continue to pick up, we do have a nice, let's go ahead and draw out the full expression of that preceding Friday. Remember that a couple Fridays ago with that real big unexplained liquidity grab. In terms of that dig to the downside, we could now use that as an expression to the upside to get to my target, which is $130,000. So to the extent that we can utilize that deep dig as an expression, as let's just say a metric to our benefit, that would be ideal. So let's see what the bulls can pull off. It's going to remain staying over the 20 moving average. On the 4-hourly, yes, on the daily at least, we'll say, and that weekly is going to be in play. Again, I'm hedged and comfortable with where I'm at and ready to double down, triple down, even below this level were Bitcoin to give me the opportunity. And just remind yourselves that along the way, never overexposed in any one specific trade, always with heavy cash reserves. This is London with MarketHedge. We're going to go over one more specific pattern. I want to make sure that you see it, and I want to discuss a few of the nuances of this specific expression. As we look at the 1-hourly chart, yes, and we look at the specific level of resistance and level of support that are both descending and what? And expanding, right? I want to lay out for you exactly, and no, guys, and nothing but certain terms. I want to tell you that this is the level to engage typically longs on this pattern. The lazier you get, the more it can cost. Ever getting along in these areas in here, you'll experience a big drop. It can hurt. Period. You may get a great break. You may get a flying shot to the upside, but typically on a volatility expression. And why do we call this volatility? As we're always looking for volatility in the markets, there is an increase in the specific price dynamic between each handoff here between the bulls on support and the bears on resistance. Bulls on support, bears on resistance. Pay attention. Each of these metrics is going to involve, because of the formation of the pattern, more in terms of each of these handoffs potentially that the pattern will accommodate in the market. So by definition, this is volatility. So it's one of our favorite patterns to draw out on the chart and to focus on, as you guys know. With that said, the pickups are along support. It's not guaranteed to hit to the upside. You will find that as you trade these somewhat frequently, pay attention, you'll find that you may get some great pickups here, and you may continue to cruise to the downside without a hit to the upside. Of course, the best payday on these specific volatility patterns is an entry on support and release on resistance. These are great shorts, guys. I hate to say it because our favorite ride is the ride up when this decides to absolutely annihilate the shorts. We call these bell pattern formations, and this at times we can rock the bells. Essentially what it's doing, it is chewing up those shorts along the top. They're just some of the best shorts in the market. As we look at this, you guys know it's kind of a short line across the top. It's a long support line across the bottom. And just be prepared to not get the full expression, the full ride up every time. You need to start making decisions in that, just call it in that third quartile and along that specific, I hate to say 1/5, start making decisions, but it can be like that. So if you're working with MarketHedge, if you're looking with, let's say, looking at your trades and your leverage, etc., or just a sheer position side, you can still make some great money in this zone. Did today in the back. You guys have seen the last couple of days generating some nice profits in some side accounts and working those digs off the level of support. So the bottom line, let's watch that 4 hourly on the Bollinger Bands. Let's see what we can get out of maybe a turnaround. I think the best that we could hope right now is a turnaround on the 4 hourly MACD histogram. So if you're picking up here, you're not alone in terms of that lower standard deviation. And let's if you're bullish, let's hope for a turnaround on that 4 hourly. You can go to the hourly if you'd like to and see, is that holding, is it not holding, and use that as kind of a precursor metric, of course. But let's get that 4 hourly in the position it needs to be before we really start turning the Go Bulls framework together here for us on MarketHedge and with Bitcoin. Guys, it's been a pleasure to talk to you briefly. Remember, never overexposed. I'm glad I hedged this bigger position here at the top, and we'll see how this works out. I don't want it to push to the downside. If you're in a long, hey guys, let's go Bulls. Let's see what we can do. Your metric, your key focus needs to be getting over that 116 near 100. What is that? Right at the 116,000, guys. This is London with MarketHedge. Been a pleasure talking to you, and we will come back to you tomorrow, hopefully with some great trade updates. And guys, let me know how you're doing in the back. Shout out to all the VIP, to Luke, to J-Mac, and to Daniel. We'll talk to you guys soon, and great to see your trades in the back. Thanks so much. Take care. Bye-bye.